Chris Versace is with us, Chief Investment Officer at Tematica Research. It's great to see you, Chris. We're seeing a market sell-off. The question is, do you sell, do you buy the dip, or do you wait and see?
So that's a great question. I think it really depends on what type of company you're talking about. You know, if we're looking at a company like, say, Disney that is temporarily shutting some of its parks in Hong Kong and in China, odds are as we get our hands around the coronavirus, we'll have a bigger sense as to what the real economic impact is there. That could very well present a buying opportunity ahead of Disney launching Disney Plus in Europe, which is going to be happening in the next couple months. If we look at other companies, though, like, for example, some of the gaming stocks, MGM, for example, Las Vegas Sands, or some of the others, they've already been suffering, given the Hong Kong revolts that have been going on, that have really weighed on monthly gaming data. So this is only going to exacerbate the problem. It might be a good idea to potentially take stock and trim out some profits if you have any left.
Yeah, you know, you make such a great point, because sometimes we get a headline and then we completely forget what it was we were discussing prior. I mean, Iran was a big story for us. Phase one, and when is phase two, and what does phase two really mean? The Hong Kong protests, and how does that truly affect President Xi? These were some of the stories that we were discussing before we got to the virus. So you're talking about that some folks have an itchy finger. They want to do something with their money. So what are your recommendations then? You're talking about getting into some of these names that are just better performers generally, with a moat maybe.
Well, right. I mean, you know how we think about things at Tematica. We're longer term focused. We tend to be thematically driven. We tend to look for opportunities to improve exposure to quality names. You were talking about Apple earlier. It's no secret that that China is one of the markets that they're weighing increasingly a greater focus in on. But if people can't go out, they can't buy iPhones. So what do? You know, I think that is a classic example of a catalyst in the back half of the year that will really drive the shares higher. That's the rollout of their 5G iPhone, which should foster a very robust EPS cycle. Remember, 2019 compared to 2018, not a lot of EPS growth at Apple. This is one of the engines that could reignite that EPS growth. And if that happens, people could step back and say, oh, the valuation may not be as expensive as I thought, 2-3 months ago ahead of this 5G upgrade. And remember, too, we're going to want to listen for information on this next low-cost iPhone that's going to target the emerging markets, particularly India. Again, another catalyst. So you want to step back and understand what are the catalysts ahead vis-a-vis the potential impact of the coronavirus, and then pick your spots.
Right, and work around it, because there's so much information. And even when I was going through your notes, I mean, you're like names to watch for earnings, travel stocks that are getting hit by coronavirus, the casino stocks getting hit by coronavirus. So what is more likely your sure investment for 2020? Saying, you know what, this one really seems to be pretty great. Is it a sector? Is it an ETF? Is it abroad? Is it at home? What is it that really is, you know what, this one really is looking good, has been looking good. I believe in this one.
Well, I'll frame it a little differently. If you're looking for kind of a safer haven in the near term, right, I would recommend a company like American States Water, a company like Waste Management. These are always benefiting from the just continued slow growth environment in the United States. They're also returning, nice dividend growth year in, year out. So those, I think, are ones that people can look to pick up sporadically.
What was it? Waste
American
Management.
States,
what was the other one? I didn't hear the first.
I was just American States Water, AWR. And the great thing about American States Water is, as we exit the winter months and we eventually head into spring, all of a sudden we're into the seasonally strong time of the year for that business. So again, we have a nice catalyst to look forward to.
Right. And just an IPO outlook as we look at Casper raising about $180 million. That's what they're looking to do. I know you have IPOs that you're watching. I don't know if you want to mention specific names or just the vibe you're getting. Which ones are you really watching?
Well, to be honest, we don't tend to delve into the world of IPOs. What we try to do is use it as an assessment of the market. Remember, towards the end of the year, a lot of the IPOs were pricing below the talk range. That to us kind of indicates, some concern in the market. So, over the next couple, week, 2-3 weeks, as we go also through earnings, we're going to want to see what the appetite is for these newer issues. Are we pricing in the range or perhaps above the range? That, I think, will tell us what the appetite is there for investors.
Right, so that's what you really do. You're not really interested in getting in on the next great IPO because so many of them got hit hard in 2019, but using it more for market appetite and to get a vibe of which way the market's really headed. Chris, it's great to see you. Thank you. Chris Versace, Chief Investment Officer at Tematica Research. Thanks for joining us on the show.